All right, let's jump right in. Today we are tackling a huge topic, the slow but steady shift away from the US dollar as the undisputed king of global currency. We're going to dive deep into the fantastic analysis from macro expert Lyn Alden to really get our heads around what's happening, why it's happening, and, what it means for all of us.
And just a quick reminder, you're watching the One-Eyed Monkey channel, where tech, gadgets, and Bitcoin collide.
Okay, so let's frame this whole discussion with a quote that really gets to the heart of the matter. Lyn Alden says, "What I worried about is not losing dollar dominance, it's losing it inelegantly." See, this isn't just about the dollar falling from its top spot. It's about how that transition happens. Is it going to be a smooth handover, or is it going to be a messy, chaotic fall? So here's our game plan. We're going to start at the very top, with peak dollar dominance. Then we'll look at the hidden costs of all that power. After that, we'll explore this new multipolar money world that's emerging, define what losing inelegantly actually looks like, and then wrap it all up with a playbook for investors trying to navigate this new world. First up, peak dollar dominance. We're talking about the time when the dollar was the absolute, unchallenged king of the hill, and how it's now slowly shifting to become more of a first among equals. So, the whole modern dollar system, it was basically born from the rubble of World War II. Got a major upgrade with the petrodollar system back in the 70s, and really hit its absolute peak, what some call the hyperpower moment, in the early 2000s. And that's kind of wild to think about. The peak was really just 2 decades ago. To really get a sense of the scale here, just think about this. Right after the war, the US was an absolute economic monster, pumping out over 40% of the entire global economy. With most of Europe and Asia in ruins, America was pretty much the last industrial power standing. That was the foundation for everything that followed. Now fast forward to today, and the US slice of the pie is closer to 20%. And listen, this isn't some story about American decline, it's actually a massive success story for the rest of the world. Countries rebuilt, they grew, and now they're just getting back to their historical economic size. The world has, in a way, rebalanced itself. But here's the thing. Being the world's currency isn't free. There is a price to pay. And that brings us to our second section, the price of power. We're about to unpack the hidden costs that come with the crown. Now, being the king has some serious perks, right? You get incredible import power, massive global influence. But it's a double-edged sword. To keep the world supplied with dollars, the US has to run these massive, persistent trade deficits. And over decades, that has hollowed out its manufacturing base and made it harder for American companies to sell their stuff abroad. And this is the absolute key to the whole system. These trade deficits, they aren't a good, they're a feature. The US must buy more than it sells to get dollars out into the global system so other countries can trade and save. America is, for all intents and purposes, exporting its currency. And all of this leads us right into Section 3, a multipolar money world. The big idea here is that the world isn't looking for one single replacement for the dollar. No, it's building a system with a bunch of different power players. So naturally, this is the question on everyone's mind. If not the dollar, then what? What comes next? And the answer isn't just one thing. It's a bunch of things all at once. The dollar is for sure going to stick around as a major player, but it's going to have to share the stage with the euro, the Chinese Yuan, and, this is a big one, neutral reserve assets. It's kind of like we're moving from one global ledger to several ledgers all running at the same time. And this is where things get really interesting. Assets like gold and, Bitcoin are starting to pop up in conversations at the central bank level again. So why now? Well, because countries are getting tired of having their savings tied to the political whims of another nation. They're searching for something neutral.
Which brings us right back to that core idea from Lyn Alden in Section 4, losing inelegantly. The biggest danger isn't the decline itself, it's how the US decides to handle this shift.
Alden paints this incredible picture. Losing inelegantly is like you're pushing against a wall with everything you've got, and then the wall suddenly disappears. You don't just stand there, you go tumbling forward, flat on your face. It's what happens when you desperately cling to a power that's already fading away naturally. This whole process kind of reminds me of that classic Hemingway line, "How did you go bankrupt?" 2 ways, gradually and suddenly. Right now, we are deep in the gradually phase. These are slow, massive shifts happening under the surface that could, one day, lead to a very rapid, very sudden change. So what could trigger that suddenly moment? Well, a big one is the weaponization of the dollar. Every time the US uses financial sanctions,
It gives every other country on Earth a massive incentive, a reason, to go out and build their own parallel systems, systems that the US can't control. It actually speeds up the very thing it's trying to stop.
Okay, so with all that on the table, how in the world is an investor supposed to navigate this new normal? That's what we're going to cover in our final section, the investor's playbook.
In a world where the money itself might be getting a little less reliable, the safe ground is often found with high-quality, profitable companies. We're talking about real, productive businesses that create things of value and can adapt no matter what's happening with the currency system.
And here's their playbook. It's actually kind of brilliant. A smart company can borrow money super cheap, use that money to buy real, productive assets, things like factories, technology, intellectual property, and by doing that, they're basically making a bet against the currency. They're borrowing what might become weaker money to buy strong, real things.
And so that brings us to the final question, the one I want to leave you with. In a world where money itself is evolving right before our eyes, where are you going to place your trust? In governments, in code, in productive businesses? The answer to that question is probably going to shape your next decade. Thanks for watching.